Stock Talks is brought to you by StockExec.com, the only online platform in the world with an annual average return of 36.93%. Your hosts for today, CEO Heather Ramsey and founder Sydney Tremayne, discussing cutting-edge, behind-the-scenes information showing you how you can optimize your stock investments and increase your returns.
Welcome to StockExec Stock Talks. I'm Heather Ramsey, CEO of the StockExec, and I think we have Sydney Tremayne with us. Sydney, are you there?
We do indeed, and hello everybody, how are you?
Wonderful to be with you again, Sydney, and to have everybody listening and viewing. And I want to let them know, if they haven't had the pleasure of meeting you before, that you are with a man, the founder of StockExec, who humbly has dedicated his life to the world of stocks, specifically 62 years dedicated to the stock industry. Humble yet significant results. When he had a baby version of this system back in the 80s, he was averaging 22% return for his clients then. 6 different brokerage firms courted him to come on board. And the one that he chose to go on board with, in fact, he became stock and top broker there. He's also a best-selling author. I could say more, but any highlights that you want to add, Sydney, before we hop into the theme of the week or the day?
I think the next highlights that I want to record are more profits for our clients. So I think you've said enough about past. That's okay.
Humble as ever and always focused on you, our clients, and let's hop in then. So I think the theme of the day is, how does StockExec pick the winning stocks that we do? And if we might drill down specifically, what is the human component of the stock selection and what is the system component of the stock selection? So let's just start with the human side first. Before there was, it's sort of like BC versus AD, before there was a system, what was the human selection process of the stocks that have gone into the system?
Before there was a system. Well, the system really does it. What you would probably say is, but humans had to design the system.
Yes, and select stocks from somewhere to put into the system, yes?
Yes. And what I wanted to do was select stocks that were investment grade. So, and some of them are more so than others. We included all of the S&P 500. We've included the top ones in NASDAQ and Amex and the Russell 2000. So first of all was getting investment grade stocks. Secondly, stocks that had a reasonable trading volume. Thin stocks are too dangerous. So we left those out. We've left out certain other things like funds and trusts and things like that. Most of the ETFs are gone too. I looked and we tried to develop a program just for ETFs, but there's not enough history in those to really be satisfactory. The first one was a little over 20 years ago. So that was some of the thinking that went into what stocks we would ask the system to work with.
Beautiful, and many may know, but just for that one listener that doesn't, when you say investment grade stocks, as opposed to what does that mean, and or what would be the opposite? What would be a non-investment grade stock?
As far as I'm concerned, anything on the pink sheets, which means they're not really on the stock exchange, they're in some sort of shadow market. They're very, very speculative. There are two ways to make money, or two ways that you have to deal with money in any kind of investing. One is to make it, but the other is to protect it. And so we've concentrated on both. So in selecting stocks, we've wanted to protect against things that go bump in the night,
Now, would that be clear then to say, or a different way to ask it, are any penny stocks or day trading?
No, neither. We avoid, now, penny stocks, in the way that people talk about them, mean these very dangerous pink sheet stocks usually. There are stocks that will be very cheap that get beaten up or are to some degree starting out, but often they get beaten up in a bear market, in a falling market, along with everything else, and maybe they get beaten up more so than others. We will follow those so long as there's enough volume in them, and there's some promise that they can recover from that. That's how you make a lot of money sometimes. I mean, we have stocks that have done well over 1,000% rate of return. Go from pennies up to $20 or something like that. That is not every day, but there are certainly enough of them that, and those all start with a very low price. I'm going to start a portfolio very soon, which will be for low price stocks, for the bottom 10% in terms of price. And we'll see how that goes. But early indications are huge rates of return from there. More risk, but profits more than make up for the losing parts.
Beautiful. So if you're a listener or viewer, we're not saying, quote unquote, don't do anything. If you may be currently doing it, and especially if it's successful for you, the key is that we're letting you know what we're doing and what has been working for us so that you can really be an educated investor with us and enjoy the returns. So very helpful. And I think the key is, yes, some stocks that we have gained great returns on have been penny stocks, but this isn't day trading. And we're not by any means knocking it. And in fact, we have an investor that does that as well. And this is very complementary to that. So a different way, and maybe we've covered it all, but were there any other selection criteria that you had? I mean, certainly investment grade stocks, and you named a number of the areas that you were acquiring them from, S&P 500, Russell, et cetera. Any other selection criteria that was in your mind that had you select the stocks you did to put into the system?
No, not really. We have a safety valve in a sense. We're moving up from the current numbers of stocks that we cover within certainly less than a month, I would say, to 5,000. So how are we going to determine when what those stocks will be? And the safety valve is the number of shares that they trade in a day. We'll start off with something like 25,000. And if we've got more than 5,000 left after all of the other editing that we do to the list, we'll just move that to 30,000 or 35 until we get to, we knock off some of the stocks and we're down to 5,000 for the US. There'll be others going to Canada, of course.
Beautiful. I see that you actually grabbed a screenshot of the actual, just a piece of the living system that we have, the StockExec system database. So just given that we're taking a picture or looking at a picture right now of some of the actual stocks, both, as I can see, both in Canada and the US, anything else this triggers that you want to share in terms of the selection criteria, what type of stocks are in there that would be of interest to viewers or listeners who...
No, that is just a general list of what we have. There's another one under recommendations that we'll probably cover at some other point, where we color code the ones that are closest to triggering a buy or a sell, or we color code them. And this is a long story, so this isn't probably the place for it. But we have found that to emulate our overall rate of return as closely as possible, the list itself makes no distinction between a stock that you might recognize and another one that you wouldn't. And it is the ones that you wouldn't recognize that make the big returns. So we need both. And we've found by really I can't tell you how. I suppose for years I've been wondering why people couldn't beat the S&P 500 index.
Mm.
Is this the time to go into that? That's my next question. Because if it is, I'll ramble on for a couple of minutes.
I think it's probably more relevant when we get into sort of proof of return. And I love that you're wanting to take on the S&P, and in fact, you have. But to your earlier point, I think it's really relevant to say that you're right. This isn't what the user will see. This is the back end raw list of the stocks, and it's even more user friendly in terms of what clients see. And yes, they will be color coded for when to buy or to sell. They'll be prioritized for you. So it's even more user friendly than ever. People used to, on the earlier versions, have to work off the raw database, but no longer.
And that was a heck of a job. I mean,
Yes, it was. Yeah,
so now we've got it organized, so it's so simple. You can pick an entire portfolio of 10 or 12 stocks in literally maximum 1 minute each. Maximum.
Yeah, I recently walked a colleague of mine. I'm part of a global success mastery network, and one of my colleagues is from Zambia, and I walked him through it in less than 10 minutes, and he was just wow, and so excited. So we'll definitely show that in upcoming Stock Talks. But for now, we're really looking at just this one question of how did the humans select the stocks that go into the system, and then a bit more in terms of the system itself. So we touched on this short-term versus long-term investing, but I wanted to just preface this by saying I had one particular investor privately discussing this with me, a fellow Andrew. He's part of the Investor's Way, it's called, out of Australia. And he was saying that he's running 4 different short-term, and he made the distinction between short-term trading and medium to long-term investing. And in that distinction, he said he's using 4 different short-term trading systems, but if he understood this correctly, and I said, yes, you do, this is more of a medium to long-term investing system. And not that one is better than the other, but they are different. So he was thrilled to find a system that was a balance to his short-term trading and would bring him medium to long-term investing. Did you want to add anything to this distinction of short-term trading versus medium to long-term investing in the world that we're in?
Not to the distinction, but I might give you some measurements. We have 3 programs that make up our system, one for each different part of the investment cycle. Most people talk about bull and bear markets, so they're just two areas that they think about, going up and going down. We added a third. There are some rising markets that continue on for much longer than normal. This is one of them. The other one, the more recent one, was in 1990. That one went on for 10 years. This one is more than 7 years as we're recording this. And those extensions mean that we need a different, much shorter term program than the normal bull market program. In a bull market, we often hold stocks, usually hold stocks as a matter of fact. I think 4.5 years is short. 4.5 to 5.5 years, basically, in the first element of the investment cycle after a bear market. So from the bottom on up to the top, we normally, that first investment, which is so easy, I mean, it's so boring that nothing happens except you hold for more than 4 years before you start actually having some action. But by that time, you built up a ton of profit, usually. So the next thing was, how do we deal with the next piece of an extended bull market? And we have another program that does that. And the first one will trade for an average of, let's say, 5 years. The second one for an average of about 1 year, as is currently the case. And then the short selling program where we make profit going down. We make profit going up and down, both ways. And that depends how long the falling market is, how long the bear market is. The last one was about 2 years. Some of them are 9 or 12 months. So those are the lengths typically of the investments that we have. Roughly 5 years, roughly 1 year, and then anywhere from 9 to typically 18 months for the down markets.
Beautiful. And as you said, most systems that you've even heard of would have only two versus three components to them. So they might make money on the 4 to 5 years climbing. They may or may not make money on the falling bear market, but they miss that the extension profits, as you say, that extra year or two of the extended bull market.
And those profits are tremendously good.
Wonderful.
They are in our program, at least. I don't know what other people do with that. But we have just a stupendous rate of return for that particular part of our system.
And those three programs, the bull, the extended bull, and then the bear market, are really what comprise the entire StockExec system.
Yes. And they all work in unison. That was important.
Beautiful. Well, we'll drill down into how the system works more. So far, we're just looking at different aspects of how the stocks were selected or the system selects them. So what are the risks in the type of stocks that we select, these more investment grade or medium to long term, or how would you compare the risk level of them to other elements of stock investing that other investors may be doing?
Well, if you're talking penny stocks versus the stocks that we're typically into, we have less risk. But the risk isn't so much in the stocks. It's how you manage it, how you manage them and manage that risk. I said earlier we have to pay attention to preserving capital as well as making it. I just lost a train of thought there while I was...
It's all well. You know, it's reminded me of a conversation you and I have had offline where I think I correctly summarized it by saying, you know, most stock investors lose money in probably three different categories, or three or four. So one is they lose money on the picking, they lose money on the timing, and they lose money on the emotions, you know, basically greed on the way up and fear on the way down.
All three.
Say again?
All three.
All three. And luckily the system has no emotions, so that wipes out the issue on the back end.
Well, it doesn't wipe it out totally, because the client will still have some and be a little bit fearful in the beginning until they begin to trust the system and see that it does what we say it does. And that's understandable. The sort of rates of return we have are at first blush a bit unbelievable until you've actually experienced them for yourself, and you've done that. But the client will have some fear and some greed, and there's some element of that still exists. Some trace of it will still exist.
Right, but 95% of it has been wiped out because the system doesn't have any of that, is what I was referring to.
And greed and fear will make somebody dither on when they pull the trigger, when they start something, or when they get out of it. And that costs money as a rule. And this will not, you won't do that with this system. It will tell you what the prices are that you should be doing things at, and they're done. They're done for you. They're done without you even having input at that moment. You've had the input in advance.
Right. So the system has no emotions, and it does the picking and the timing for you. Yep. So it's literally saying, do this now, basically.
Yes. If you think about it, any stock you can make money by investing in any stock, so long as you do it at the right time.
Yes.
They all go up and down.
Wonderful. So let's take a look at, and again, I'm just coming at this in different ways to really alleviate any concerns that any viewer might have of can they still make high returns with quote unquote safer stocks? Do we have the blue chips, the light blue chip stocks that they can invest in and still make over 30%, which as we know, our system right now as of current day, 36.93% is its average annual return over the last 41 years of backtesting. So the question is, again, yet another angle on client
the answer is you can never tell a client what the future is. Nobody can. So I can't tell anybody that they'll make 30 or 36 or 20 or something else, or that they won't lose. But I can say this about what are commonly known as the blue chips. They are established companies, and their profit margin is within a narrow band, is sort of set unless they come up with new inventions. The ones that make the most money are the companies that are not yet blue chips. And at the level that we're talking of, we're not talking about higher risk. We're talking about, yes, some more volatility, and volatility actually, if you time it correctly, is your friend. If you didn't have volatility, you can't make money. But the blue chips will be less volatile than some of the younger stocks, the still growing stocks. Blue chips are already there to some extent.
Mm-hmm. So there's profit in change in either direction.
Yes, very much so.
Yeah, change or volatility, as you say.
Mm-hmm.
Fair enough. And so yes, they are in the system, and yet it's often the ones that are quote unquote the blue chips to be that will get the highest returns.
Sure.
Excellent. Okay. And
look at if you'd invested in Facebook in the early days, or Microsoft in the early days. Look at the fortunes you would have made. Some of the people on staff with Microsoft in the early days became millionaires very quickly because they had shares.
So that's interesting. And it doesn't have to be this, but are you saying that the StockExec system can identify, quote unquote, the Facebooks, the Microsofts before they become as financially infamous and successful as they do?
It can't say this is what's going to happen to this company, but it can say this is the time to buy. Yes.
Right. And so therefore let's just keep it in sort of street language, shall we say. It doesn't know whether the stock, say, is going to grow from $10 to $12 or from $10 to $100, but it knows when it's growing.
Yes.
And therefore, and it also knows not to get out at 12 because it's going to go up to 15, and not to get out at 15 because it's still going up to 20, and not to get up, et cetera. So it's going to optimize the growth curve as well, regardless of how far that growth curve is.
Yes, and there's a way it does that, obviously. We'll talk about either later today or in a later presentation, but there are ways that it does it. What I determined at the very beginning was I wanted the stock to tell me what it was going to do, not what most people do. Most analysts say, this is what we expect the stock to do. They are trying to dictate to the stock what it will do. You can't do that. The stock is going to do whatever it does. What we do is look for it to change direction from up to down and back up, back from down to back up again. That's what we do. And when we can detect that change, and we have ways of doing it, we're able to, within reason, buy low and sell high. Most people get it upside down because of fear. They sell low, and then they get greedy later on in the market and buy high. Now that's an absolute recipe for poor results.
Yeah, and back to the Facebook example, which is very interesting, i.e. identifying true opportunities. It can't identify the Facebook in advance, but it will identify every stock that is going through a change into a growth or bull expansion, and it will optimize whatever the growth curve is of that stock.
Yes.
Neat.
Within
Right.
reason. I mean, nothing is perfect, and our system isn't perfect either. But it's a lot more perfect than some.
Love it. Maybe one more question that I can think of, and then for sure add on to this. But in terms of what clients and or people who are considering the StockExec system may want to know is, we've mostly been talking about the U.S. system. We have stocks within the system in Canadian stocks as well. Is the selection criteria any different between US and Canada, and or just compare those two markets, whatever seems relevant to you to share?
The two are, in terms of programming, are the same.
Okay.
That we've tested this in the past in a total of 56 major stock markets around the world. And each time we had to adjust the parameters of the program to some extent for that local market. But between Canada and the States, currently the program is the same.
Can you see expanding eventually into even beyond Canada and the States?
I'm already talking to people about that.
I know we are. Not all your answers I know, but that one I'm excited about. Maybe just for fun, I know it's in our future, but can you share what some of the markets are that have done better than the States? I mean, we're already at 36.93.
Most of them.
Aha.
I would say at the time that we were testing all 56 of them, the States was probably in the bottom 25%, which was a surprise to me. Canada is streets ahead of the States in terms of results, and I'm not really sure why. It's a much smaller market, which I don't appreciate. It is heavily resource weighted, and you would have thought because of that, our results for Canada today would be extremely low, because mining and oil and all of those things have been beaten up so badly. But that's not true. It's much higher than the return in the States. There were some, when we did the 56, that in Europe that were lower. Asia, well, we hit all of the developing countries that are doing so poorly today. Venezuela, for example, and Brazil were doing tremendous things at one point. But I guess it depends. Economies sort of rise and fall, as you know, all of them at different times. And some of those have been hit very badly recently by oil, including Canada. But the Canadian results are still vastly higher than the States.
So I know you're often shy to share them, and yet facts are facts. US is 36.93, averaging annual backtested 41 years. What is the current Canadian average?
I don't want to talk about that, and I'll tell you why. 36% is hard enough for some people to believe. And I understand that. I fully understand it. But if we go higher than that, they start to be unbelievable, and there's no point in giving people things that are unbelievable. So I have a trajectory along which I want this company to follow. I want people to understand from their own experience that the American results are real. Will they always get 36%? Absolutely not. What happened yesterday isn't what's going to happen tomorrow. But within one side or the other, it's reasonable to expect that figure, although you can't tell the future from it. It is an impressive figure given the period of time that it was over. So when people get used to the fact that hey, I really can make this kind of money, they will then be more open to believing even higher figures. So that I'm holding the Canadian market back because of that. We're not going into Canada immediately. We've got some business there, but I'm not pushing it.
I appreciate that. And the only reason I guess I was asking for two reasons. One is when they hear the higher returns, it may in fact make the 36% look and feel more believable. And for instance, Canadian listeners or viewers or people who have Canadian cash, they may want to start in the Canadian market. So it was sort of a very pragmatic, practical question of some may be starting with Canadian stocks, and therefore they'd want to know that it's not 2% or 11% or 22%. Yes, that it is more than 36. And I was at least looking potentially to give them the in the 50s, for instance, range of where it is.
Well, my suggestion would be that they talk to us, and I will give them the numbers. I will show them how those numbers are obtained. But just in general, I really don't like to talk about it just yet.
All right, all is well. Well, if 36.93 as an average annual back tested is okay for you as a listener or as a prospect considering coming on board with StockExec, you'll know that the Canadian is that and even stronger. We'll leave it at that. I understand and I respect Sydney's prudence because he's primarily, and we all are as a team at StockExec, looking out for your peace of mind, your confidence, and your understanding of this system, that it is not an individual sort of at some crazy, switchboard selecting stocks. It is a system that has been programmed in with great wisdom. As Sydney said, 3 different components to the program, all synergistically pulled in together, that is 24/7 on your behalf while you're relaxing and doing something else, is picking and timing the buy, hold, and sell of thousands of stocks. And so
I consider what we do to be very straightforward, very easy. It wasn't easy to put it together, obviously. It wouldn't have taken us almost 8 years now.
So just to wrap up, Sydney, anything else on today's Stock Talk around how the StockExec system picks and times the buying, the holding, the selling of winning stock portfolios? Anything else you want to add?
Well, I think the system that we have is so easy. I'm surprised somebody else didn't invent it first. But I know that most people in the company realize how complicated it truly is. I look at, we're measuring a trend, we're looking for the change in direction. I've found a way to do that, and that is straightforward. But to program this, to do all of the infrastructure that is used, is very, very difficult. I know that much. But for the client, it's so easy. You see, we've automated everything possible. The only thing we don't do is contact your broker for you. Incidentally, that broker is under your control. It's your brokerage account. We have nothing to do with your money, so that's a safety factor. But what I also wanted to say, Heather, was this. I work constantly to improve the rates of return in the system. I'm doing it for clients because I want them to make more money, but also for the company, because if clients make more money, we do as well. So, I mean, we're on the client side, pretty obviously. It's not like a brokerage firm where you do something, you have an action that they carry out for you, buy something or sell something, or sometimes even talk to you, and it costs you money. You pay us only when you make money first, and I think that's important. I think that's something I'd like to see throughout the industry, and maybe it'll happen in time. But the results we have today, I already know we're going to exceed in the very reasonable future in the next few months, because version 3 of the program is underway now as we speak. I have done a lot of this manually, and so I know to a limited extent some of the things that I expect to happen in the whole program. So what you've heard about this morning was just the tip of the iceberg, a little corner. There's much more to come, and there always will be.
Beautiful. Well, there's a couple of, or 2 or 3 themes that you highlighted as a wrap up, Sydney. So I'm just going to recap to say one is, yes, we are already getting 2.8 times the S&P, and yet we're not static. And I think that's a big message to share, that we're constantly improving and committed to improving that return. And then the second and or third category is that you keep control of your money. You're not giving a StockExec your cash. You are accessing the advice of the StockExec system. And I think finally, and we're going to have a whole other stock talk around this in terms of, working with your broker or not, et cetera. We're not telling anybody to no longer work with your broker anymore. They can be mutually exclusive, shall we say. So you can have funds with your broker, and you can also have funds that are accessing the advice of the StockExec system. So you can have it all is the short answer. And I think finally the key is 0 returns in your portfolio until you actually access the system. And so we've made it extremely easy for you to do that, and schedule a live demo with us at stockexec.com/schedule or schedule, depending on how you pronounce it, and or call our 888 number there. So the key is to take you from 0 or low or losing returns into the realm of the StockExec system and the returns it can produce for you. And that takes just one step of action with you to say yes to us. So looking forward to having you on board. If you're already on board with us, hopefully this was a valuable stock talk for you. We're always educating our clients live, and we'll be having Q&A as well in the chat box, etc. So thrilled to be with all of you, and with you, Sydney, as always.
Thrilled to be with you too, and I'm looking forward to continuing this series. We've just scratched the surface. There's much more to come.
Exactly. Cheers, and till next Stock Talk.
Schedule a live demo at stockexec.com/schedule or call 1-888-992-4558.